Good morning, Tim Haefke from TopNotchTrading here on Wednesday, November 19th with today's MrTopStep update. Well, I was doing a little video with Danny yesterday and I kind of pointed out I was going to bring up a Fibonacci retracement, and I want to just further educate people about what Mr. Fibonacci would think like as far as how I think he thought. It's kind of strange saying that, but you know, back then, there was all of a thought process, and I'm pretty sure Mr. Fibonacci said, there's all sorts of ways to look at me. You can look at me on a daily basis. You can look at me on a weekly basis. Look at me on a monthly basis. Look at me at an overall low that led to new highs. And boy, yesterday, I'm talking about earlier in the week that we're looking at some negative signs, and what happens is the S&P finds new all-time highs. The NASDAQ, new contract year highs, likewise. But then I did point out that I was going to mention about a fib. And when I talk about, sometimes it's weekly, sometimes it's monthly, sometimes it's an overall trend, I started with the month of November. And let's go back here, and here's my chart. You're going to see the price action here, so if you can see the levels of retracement, that's what to key on. But we came back in here all the way, and when we opened on the regular session, and it was like the third or fourth, I'm not quite sure, we made the monthly low of 95.80 pit 95 quarter mini. And I'm showing you the mini. And with that, we took off, got above this monthly high, and started further contract highs, and as the market went higher. We come back down right before the end of the week, and we do kind of a retracement here. But this is the key I want to talk about here. So the weekend trade opens, and the weekend trade takes us down to a low of 21 even, which you see this line right here. We follow last week's low at the week high, and on a regular session, if you do it, it gives us a fib objective of 43.10 in the pit. Now that's on the 8:30 to 3:15 trade. But because it's all about the mini, I look at both signs. And there was a big sign that it showed on me on this Fibonacci. Making the low of 21 even on the weekend, we came in on the regular session day trade and made a 25.75 mini low, but in the pit, it's at 25 half. This point of contact is 25.75. Pit 25 half. So as the week progressed, Mr. Fibonacci said on a daily basis, we're targeting 43.10. Well, what happens before we open? I believe on Thursday, we make a high of 43.75 Globix, overnight high. And then on the regular session, we see a 43 quarter mini high in the daily, 43 pit. Well, lo and behold, 43.10 is our weekly fib. So with the weekly and making the previous week's low down at 95 quarter, Mr. Fibonacci said, think, what would you look at? So I take myself and I go, I'll take the month low with this Fibonacci level that they found, and what does it equate to? We come down during the process of the week and we're looking for this Fibonacci retracement that comes in at 25 quarter. Well, last week's low is 25 half. The mini print during the regular session is 25.75, but the overall weekend is 21. The mind thinks, the mind thinks. So after I do this retracement, I come in on Monday morning on the weekend session low, and what is this low? And you go on a mini, you take the 95 quarter low with the 43.75 high, and the week low so far on Globix that we didn't see is 25 quarter. And that's this Fibonacci retracement right here that I'm talking about, all right? So with that in mind, Mr. Fibonacci said, well, if we can hold a 2-week but a monthly pullback of 382, it gives us an upside target of a 382 extension. So all I'm looking about after they took out 43.75 yesterday's Mr. Fibonacci, if he has it his way, says we're going to go see 62.22, 62.30 pit, 62 quarter, 62 half. That is still an objective right now. The only way we breach this objective of finding this high of 62 quarter, 62 half, I should say objective, it's not finding a high, it's just an objective, is by coming back and taking out that 25 quarter. All right? So let's go to the next chart. Because we topped out yesterday at 54, and we failed to see the 62 quarter, 62 half, I have to go to Fibonacci now, because what happens today is we take out the 43.75. So when I take this high of 54, I start doing my calculations of the 382, the 50%, and the 618. So I come over here and I tell myself, well, 3160 is the 382. That's a main key that I'd like to have it hold as we head into the FOMC minutes today. But the 50% retracement right now comes in at 2462.5. That would take out the 25 quarter, but that gives us an opportunity of seeing a 50% retracement. And if we can kind of double bottom there, we will reevaluate our next move. And whatever move comes down to here, it would be another Fibonacci idea. So right now, Mr. Fibonacci says, if we can hold 31.75 and before the FOMC minutes, and we retain a move back above 43.75, but the key is the opening range of 46 to 48.20 today. I can't believe the pit had a 2.2 handle opening range. But thinking of moving forward, I'm going back, and I'll tell you one last thing. So keep this in mind with the Fibonacci. Upside on this FOMC minutes is 62 quarter to 62 half as the first area. But if you go back, and I showed you that channel trend from 2011, 2012, the target is 67 half. It's food for thought. Let's just see how it develops. Any move under this 24.5, I should say 2462.5, 50%, it'll avoid any further, and we could see further erosion moving forward. Have a great day, and we'll talk to you later.